Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from Markets.X. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from Markets.X.
What's happening, people? How are you guys doing? Today I want to talk to you about the 5 things you should know when investing online to stay away from scams. But first, for the ones of you that don't know me yet, my name is Andrew, and for the last 10 years I've worked in many retail and institutional forex brokerages in Europe. Join me in this amazing journey and find out the secret corners of forex trading from top industry specialists. Learn what most forex brokers don't want you to know by watching our daily broadcasts, and if you like what you see, like, share, subscribe, and support us in delivering more great content. I'll give you exactly 30 seconds to absolutely smash that subscribe button, and then we get started. Go on, smash that subscribe button. Don't be haters. 5 things you should know when investing online to stay away from scams coming up. Right, and here we are, beautiful people, with 5 things you should do when investing online to stay away from scams. I'm going to start with number 1, which is do your due diligence. It is imperative. It is important. It is the most important part of your online journey. Do your due diligence, guys. Make sure you know what goes on. Make sure you know the company you're dealing with. Make sure you know about the business. Make sure they're legit so you don't get scammed. Okay, so doing your due diligence is the number 1 whenever you wish to start trading with an online company. At the bottom of the website of any financial firm, guys, you should find an address, you should find the registration number and a license number. Make sure those do exist. And after you do your own due diligence, guys, we move on to number 2. Don't be afraid of missing out. Usually scammers put pressure on investors by appealing to the fear of missing out. So, for example, you're going to get the odd call one day saying, didn't you see the price of Bitcoin? It just reached $50,000. Your answer should be, so what? How is that going to benefit me? It already happened. If you would have called me 2 weeks ago when Bitcoin was only 20,000, maybe. Okay? Don't be afraid of missing out, guys, because whatever goes up must come down. Whatever goes down must come back up. Okay? So the probability of you making a small fortune by Friday without having any prior knowledge to the financial markets, it's equal to the knowledge you have about the financial markets. This is how it works, guys. No FOMO. Don't be afraid of missing out. It already happened. Okay? Focus on what you will do when you start your journey. This is it. Let's move on to number 3, guys, and see what is the number 3. Never invest with borrowed money, guys. This is a golden rule when it comes to doing business in life. Do not borrow money to do business. Do not borrow money from your credit card. Do not borrow money from your friend. Do not sell your assets in order for you to make a bit of profit, in hope for you to make a bit of profit. Invest only as much as you're comfortable losing to start with. Okay, because very, very likely you will lose a tiny investment, especially at the very beginning, having little to no prior knowledge about the financial markets. This is how it works. Some people avoid this losing streak at the very beginning of their career. Some people, or most people, do start with a bit of losses. But if you're taking the time of day to learn about it, if you're taking the time of day to do your due diligence and to improve your skills, then that tiny loss can be easily turned over into profit. Okay, even though if the profit is going to be tiny at the beginning. So never invest with borrowed money, guys. You're going to be under pressure because you know you borrowed that money and you have to pay it back. Okay, you have no idea what you're doing. You just started your journey in the financial markets, in a line of work that you're not mastering yet. You're not fully understanding yet. Okay, so never invest with borrowed money. Let's move on to number 4, guys, and see what is the number 4. Take time to learn about it. Okay, it might seem cheesy, it might seem as a cliche, but do take the time to learn about it, guys. It is very, very important, and this will make the difference between a successful trading career, a potential successful trading career, okay, and a catastrophic trading career on the other hand. If you only listen to that guy at the end of the line, which you never met before, which you only met last week, okay, the chances are you're not going to be all right on the long run, okay? Think who's looking after you other than yourself. This is it. Yes, so take the time of day to learn about it, guys. It is very, very important to know at least the basics of trading before you start your journey in the financial markets. And this takes me to number 5, guys. Never, ever, ever go all in terms of investment or in terms of trading. Never go all in. There's always tomorrow, guys. The probability of you blowing up your trading account, blowing up your savings account, if you go all in on something that you're not mastering, okay, is very, very, very high. So never go all in when it comes to online investments, online trading, or even physical trading. Okay, always, always, always see it this way. There might be a possibility, there might be a chance of you losing that initial investment. Maybe on the second investment, it's going to be better. Maybe on the third investment, you're going to start making considerable profit. But always the first investment should only be whatever you can afford to lose. You should do your own diligence. You should take the time of day to learn a bit about whatever you're getting yourself into and never, ever go all in. This is it, guys. This is it for the 5 minutes of wisdom today. If you have any more questions, feel free to contact us on instructfx.com, info@instructfx.com, or my direct email, guys, thechartwhisperer@gmail.com. This is it. Stay tuned. We're coming back live in a few seconds with the U.S. Markets Open.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How is everyone doing this afternoon? Let me know how you're doing in the comments box below, guys. And if you like what you see, don't be shy. Like, share, subscribe, and support us in delivering more great content. Now, let's get down to business, guys, and see what is happening in the markets today, Monday, 8th of February, 2021. Bitcoin breaks $44,000 just minutes ago on Elon Musk comments. Joe Biden, the new U.S. president, announces on CBS gloves on China. Crude oil prices high $60 per barrel after Brent Oil broke it already. U.S. stocks are set for higher opening today, consolidating 5 straight days of gains. And Hyundai and Kia tumble after Apple pulls back. U.S. trading session coming up. Right, and we're back, beautiful people. Happy Monday once again, and type your comments if you have any comments. Let's see what is happening in the markets today, guys. We have a series of news, a series of events that impact the financial markets. So I'm going to start with the economic calendar, guys, today. Let's see what is happening. This week, we're going to have more holidays in the economic calendar than announcements. So all day today, holiday in New Zealand, guys, the National Day. Then we had a few speculative net positions announced pre-European markets open today. We had the German industrial production coming out at 0% versus an expectation of 0.3% by consensus. And in 47 minutes, guys, we're going to have a press conference from Bank of England, followed by a press conference from Christine Lagarde, the European Central Bank President, at 6:15 GMT plus 2. This is what is happening in the markets today. Not a lot of announcements, guys. The markets are mainly reacting to fundamentals. Now, let's have a quick look, see what's going to happen tomorrow, guys, on GMT plus 2:01 after midnight. We're going to have retail sales monitor announced on the British pound. We're going to have a couple of announcements from Australia and New Zealand before the European trading open. We're going to have the German trade balance, guys, once again tomorrow at 9 o'clock, just 1 hour before the European trading session opening. Okay, followed by a few announcements in the afternoon on the US dollar. We're going to have the job openings, WASD report, and the API crude oil stock will be announced as well. On Wednesday, guys, we're going to have after midnight, we're going to have Westpac consumer sentiment and other two announcements on the Aussie dollar, followed by three announcements: the consumer price index and the producer price index on the Chinese yuan. Again, that's everything before 10 o'clock, before the start of the European trading session. Now, we're going to have trade balance for non-EU for December, coming from the pound at 9 o'clock GMT plus 2. Wednesday morning, followed by German consumer price index, retail sales from Brazil, and a series of announcements on the US dollar starting at 3:30 GMT plus 2 on Wednesday. We're going to have the core consumer price index. We're going to have the crude oil inventories, guys, the US federal budget, 10-year note auction, and the federal budget balance. Okay, so on Wednesday, we're going to have Jerome Powell holding a press conference. Big volatility expected in the afternoon on Wednesday after the crude oil inventories. Right, let's see what's going to happen on Thursday, guys. We're going to have holiday in Asia. We're going to have Japan National Day, China Spring Festival, and South Korea New Year's Day. These are the holidays I was telling you about. Okay, after that, we're going to have IEA monthly report on the US dollar, European Union economic forecasts. Okay, for the month, we're going to have an OPEC monthly report and initial jobless claims announced on the US dollar at 3:30. And on Friday, guys, again, we're going to have holiday in Asia. South Korea, China, Hong Kong, and Singapore are all celebrating New Year's Day. Okay, and in Europe, we're going to have a few announcements on the pound. We're going to have a Super Friday on Friday with the trade balance, the manufacturing production, and industrial production, along with the gross domestic product to be announced on the pound. Okay, and then lunchtime, we're going to have industrial production in the Eurozone, followed by speculative net positions announced on the US dollar in the afternoon. So this is how the economic calendar looks like for the week, guys. We're still in the earnings season. We're still going to have a few announcements, okay, this week from some big companies announcing their earnings. But we have something way bigger to talk about today. And this is Bitcoin surges as Tesla confirms it bought 1.5 billion to diversify reserves. Don't go anywhere, guys. I have Neil Wilson joining us from the heart of London with more news on this topic. Stay tuned. We're coming back live in 30 seconds with Neil Wilson.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from Markets.X.
Right, ladies, gentlemen, traders, please welcome Neil Wilson, Chief Market Analyst at Markets.com from the heart of London. Good afternoon to you,
Hey.
sir. How are you today? Happy Monday.
I'm very well, thank you. Yeah. How are you getting on?
I was very okay until a few minutes ago, until about 20 minutes ago when I saw an article. So the article today is Bitcoin surges as Tesla confirms it bought $1.5 billion worth of Bitcoin to diversify reserves. And this is the article that I was telling you about. The price of Bitcoin surged a few minutes ago to a new record high of over 41,700 after Tesla confirmed it had bought 1.5 billion of the digital currency on Monday. The electric car company said it had made this decision to further diversify and maximize returns on our cash that is not required to maintain adequate operating liquidity, in line with a recent change to its investment policy. Now, Neil Wilson, what's your take on this one?
Well, I mean, it's not. First of all, it's a big decision by any company to, to invest in cryptocurrency at this scale. I think it's probably the biggest we've seen. We have seen Square last year, MicroStrategy. There were a couple of companies that did invest in Bitcoin as part of their sort of capital allocation strategy. But this is on another scale. This is 1.5 billion. It's a significant amount of the market actually for Bitcoin. Clearly, we've seen Elon Musk tweeting about Bitcoin. We saw him on January 29th. He put Bitcoin in his Twitter profile, raising speculation that he was buying. We assumed he was. It's somewhere in the market. It wasn't clear how much or to what extent. He's been tweeting about other cryptocurrencies as well. But this is really confirmation that it's not just Musk tweeting. It's a big move by Tesla. I think it probably raises a bit of concern about the way he's been moving the market by tweeting. And I just wonder, it's maybe because of the type of investors that are in Tesla and the people that are buying Tesla stock on the margin, at least. It's probably not that big a concern, but there might be some fund managers out there. We need to wait and see who might be a bit worried about this sort of move. It's a lot of exchange risk that you're taking onto your books. It's essentially an FX risk, and it's because volatility in Bitcoin is so high. It's a significant amount of risk there. So there might be some concerns, but it just plays into this story that that what's moving the markets is not the fundamental analysis or anything boring. It's social media influencers. It's people like Musk. It's Reddit. It's all these other things that are moving the market.
That's exactly something I want to talk about. Now, in this situation, personally, I see that market manipulation at its best. What makes Elon Musk different than the Reddit crowd that took a beating last week?
Well, I mean, Musk has been has his knuckles wrapped by the SEC before when he tweeted about taking Tesla private. He tweeted $420 and funding secured. The stock was trading 300 and something, so it shot higher. Now he was, as I say, sort of chastised by the SEC over that. I think in this case, you got to look at the timing. Did Tesla invest in Bitcoin before or after he put Bitcoin in his Twitter profile? They may be interested to know about that, because I think it's important to realize that it's one person on Reddit, one person on a chat room is by no means equivalent to Elon Musk, who's got a massive Twitter following. He's still chief executive of an S&P 500 stock, Nasdaq listed. He's got certain sort of obligations which your average retail Joe who's in a chat room simply doesn't need to worry about. So I think I can imagine the SEC they'll be looking at this one now.
Yeah, because it doesn't look right. I mean, last week we were talking about the Reddit crowd. This week boycotting, some stocks and silver. This week we see Elon Musk tweeting. But my question is this: what happens to the average trader? Yeah, when one of these super wealthy individuals close their positions to take profit, where does this leave hundreds of thousands of people that want to invest in Bitcoin, and they don't know how to invest in Bitcoin? They're going to purchase Bitcoin now on the fear of missing out. Okay. And Bitcoin is not cheap. Yeah, looking at the charts now, we're looking at Bitcoin trading at $44,100, $200. Yeah, 44,000 for a Bitcoin. In some countries, this is you can buy a studio, okay, with this amount. So the thing that bothers me today is seeing this kind of market manipulation, and it's clear that all these people that purchased huge amounts of Bitcoin want to do is push the value up so they can make a small fortune. But what happens to the retail trader? Yeah, to the average person. This is the thing that bothers me, because cryptocurrencies are a high risk investment as they are. We don't need any more gas on the fire with it. So this is it. But anyhow, I don't want to get upset. It's only Monday. I want to be positive today. So let's move on to some happier things. By the way, quick question from me to you. Do you really believe Bitcoin will rally from now to 50, 60, 70,000 by the end of the week?
I think it could hit 50,000 this week, potentially. I think that'd be a realistic sort of extension from where we've been. But yeah, I think longer term, I just worry that Bitcoin is, and like all cryptos, are simply a giant speculative bubble where the only value is in being able to sell it to someone who's prepared to pay a higher price. And that's it's the greater fool's theory in action. And I just worry that, ultimately that's where we're headed with this. And there's a lot of, there'll be a lot of people making an awful lot of money before it all blows up, though.
Yeah, true. I'm looking forward to the SEC, and I'm hoping, fingers crossed, that the ACC opens an investigation regarding the time of the tweet. If that was before or after the company purchased that huge amount of Bitcoins. Now, let's move on to happier things, Neil. What did you think on the NFP on Friday? 5,000 jobs offered versus an expectation of 50,000. Nice spike on the euro US dollar.
Yeah, the dollar gave back a lot of the gains after that report. I think the market, though, on the whole, didn't really flinch. The stock market, anyway, since we're getting this, stimulus from the Biden administration, and they're pushing through this budget reconciliation process by which they don't need the 10 Republican senators that they otherwise would. You're allowed to do that once per year, and they're going to use that process now. It maybe means infrastructure, green spending, that big sort of spending package is going to be delayed by a year. Certainly be tough to get that one through this year. But it does mean that this immediate COVID relief bill can get passed relatively quickly. And so that sort of underpinned the equity market. But yeah, I think that combined with the NFP just sort of underlines where we are in terms of, real economy still suffering, but liquidity still really, really positive, really, really strong. Monetary and fiscal support still there, so it's good for the market. But interesting, we are seeing bond yields start to move higher, and that process that we've been sort of following since November continues. We're not seeing signs of it slowing down too much. It did slow a bit in January, but it's picking up again, and we've got US 10-year yields back at a year high now.
All right, we're going to talk about the yields in a minute. Now, let's have a quick look at the Euro USD chart. Okay, this is the chart on a 60 minutes. It's on your trading platform. Okay, and overall, we saw the euro in an uptrend, from left to right. It created a double top there, and it started the downtrend. Now, has it ended the drop, or what should we expect from the euro this week?
Well, I'm of the opinion that move lower in the euro was a bit of a bull trap for the dollar bulls. That we do see a reversal. I think Friday's daily candle was an outside day of bullish engulfing type move on euro dollar. That is potentially marking a reversal, and we start to look back up to 125. I think we saw the key sort of Fibonacci support level hold at around about one spot. 1950, around that region. I can't remember if it's a 23%, but there's a level there, and that's held fairly adequately. We've had that bullish engulfing candle on the Friday, so I think you could be looking at some some interesting moves on euro dollar, and it could start to see a reassertion of that dollar weakness once again.
After Joe Biden and the Senate basically approved the almost $2 trillion stimulus bill, obviously now it's expected for the US dollar to lose a bit of ground, correct?
Yeah, I think with that amount of stimulus going into the system, and still, that's 10% of GDP. So, and I think really what you've seen is probably that the equity market made a record high on Friday again. After that announcement, you got US yields pushing up. So really, the market hadn't priced the 1.9 trillion. The market probably until then was pricing in maybe half that, and so yields were not quite as high. The equity market was a bit more circumspect. We saw that sort of 5% drawdown, which is now been erased, obviously. But I think now that we've got this budget reconciliation process, that means pretty much by and large we get 1.9 trillion, and that's 10% of GDP on top of 10% of GDP that was delivered last year in stimulus. Mm-hmm. So you've got 20% of GDP has just been spaffed by the Treasury into the US economy. So it's a massive amount of stimulus, and that's really what's driving everything.
And supposedly we're going to see the S&P and the Dow creating higher highs and breaking all the records. We're already looking at a 5-day winning streak so far. Now, talking about stocks and bonds and yields and cyclicals and stuff, I got a lot of emails about cyclicals. Okay, because people hear about it. Our viewers are mostly beginner traders that don't know what cyclicals are. So please tell us, Neil, help us out. What are the cyclicals and why are they so popular?
Well, cyclicals are just simply stocks that are exposed to the business cycle, if you like. So you get in the usual business cycle, at the extreme, it's boom and bust. You get a recession, you get periods of growth followed by a period of sort of a drawdown in the economy, and it sort of tends to be linked to the interest rate, the way that the central banks are moving interest rates. So cyclicals are just simply those stocks that are exposed to the economy. For example, Tesla is definitely not a cyclical stock. Apple, any of these sort of big tech names, they'd be what I'd call probably more like, although they've got a cyclical element, they're the sort of growth stocks that people are paying for growth. Cyclicals might be more like consumer discretionary companies, your likes of travel and leisure, for example. That's an area that would be classed as cyclical. It can be complicated, I think, as well. You could say Netflix, for example, is cyclical because it's consumer discretionary. I would say it's probably not so cyclical. It's probably more tied to that sort of growth end of the market. So there's a bit of crossover, but cyclical basically is just exposed to the economic cycle and therefore tends to do well when the economy is doing well, tends to do poorly when the economy is not doing so well.
Outstanding explanation. Thank you for that. Now, what is better to trade, Neil, or to understand, cyclicals or non-cyclicals?
I think they both have merits. I mean, I don't think there's any particular sort of benefit one or the other. I would say that the benefit of a cyclical is you can probably pick. You're sort of trading a range, maybe. I mean, it might tend to drift higher overall, but you'd expect a drawdown in a cyclical stock at some point when the economy starts to sour. You'd expect that stock might start to retreat, and then once you see some sort of signs of things picking up again, that stock might start to rally. So you can maybe think about timing your trades on some of those names a bit more than, say, a pure growth stock like Apple or Alphabet or Netflix, where you're sort of picking really, it's been kind of one-way traffic on those. It's quite difficult to trade it other than long and maybe look for an entry point when it sells off a bit. But Yeah, I think there are lots of different ways you can trade them. I guess the thing about cyclical is you can assume that there will be periods where it's rallying and then periods where it's suffering. So there's maybe there's a bit more volatility in the stock.
I'm with you. Thanks for that. Now, another thing that our viewers ask us sometimes is the difference between bonds and yields. And I'm with them. I didn't get it. I was in the industry for about 3 years until I got my head around it. So let's try and explain it to them once again. What are bonds? What are yields? Yeah, what's the difference between them?
Well, a bond is, it could be, mainly we're talking about government bonds, but you get corporate bonds. And bonds and bond prices and yields move in the opposite direction. So when bonds are in demand, the prices go up, and that means that the yield on them, the coupon, the amount of interest that you get on them, goes down. So if you've got a bond at $100 that nominally pays you 1%, and therefore you get $101 back. If that bond is trading at $99, then it's got a coupon of almost 2%. So because it's $2 on top of the 99, so you still get the 101 back. So essentially it's just a debt instrument, and the thing to remember is that bond yields move the opposite way to prices. So yields go up when bonds are being sold.
So when the yield curve is pointing upwards, okay, that's good for investors. And most probably bonds are down at that point, the government bond.
It means that bonds are probably being sold, particularly longer dated bonds. So people don't want to own the bond to maturity. They don't want to be in a 10-year government debt instrument. They want to have their money in stocks. So I think that's generally how we would sort of, in a very simplistic way, describe it.
Thank you for that. And usually bonds are used to hedge a portfolio, an investment portfolio, from what I know.
Yeah.
Now, question: what's going on in the markets this week? Because I see we have more holidays in the economic calendar than news. What's hot this week to keep an eye on, Neil?
Well, I think the US CPI numbers are big because we're looking at this inflation. So while bond yields are rising, 10-year at 1.2%, you've also got the curve steepening. So 5s and 30s curve is its widest in 8 years. 5-year break-even inflation expectations are at the highest in a number of years. So you're getting this expectation of inflation to come through. You've got a lot of pressure. Commodity prices are a lot higher. You look at particularly softs, corn and soya and whatever. Copper price is higher. Oil's moving up. Brent's at $60. You've got commodity prices moving higher. The last ISM and IHS manufacturing PMIs suggested cost input inflation for manufacturers, which they're able to pass on to customers because you've got this pro-cyclical kind of tailwind from stimulus. You've got the economy bouncing back. You've got lots of people money in their pockets from stimulus checks and furlough schemes and whatever. So you've got manufacturers able to pass on that inflation, and that's feeding through into higher inflation. So I think we need to see what this CPI number is and what the sort of pressures are looking like, because if inflation does start to rip higher, then that starts to put pressure on equities, puts pressure on the central banks to maybe cool things down a bit. So we need to watch that one.
Right, I'm with you. Neil Wilson, thank you ever so much. I'll try and talk to you again on Thursday. Let's see what's happening with the Bitcoin by then. What other tweets we're going to have, and when is that SEC investigation starting? It's the first time in my career when I am pro an SEC investigation. Right, Neil Wilson, thank you ever so much, man. Have a nice week, and I'll see you on Thursday. Right, ladies, gentlemen, traders, we had Neil Wilson with us from the heart of London for an amazing market talk about Bitcoin, cyclicals, and the market news. Stay tuned. I'm coming back live in 30 seconds with the charts of the day and the signals of the day. Don't go anywhere.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from Markets.X.
Right, and we're back, beautiful people. Let's see what is happening. What are the top 5 things to know in the markets today, guys? What is going on? And then we're going to move on to the charts of the day and the signals of the day. So, number 1 on the board today, guys. Biden sees extreme competition with China. In other words, gloves on China. The U.S. is ready for extreme competition with China over the next 4 years, President Joe Biden said over the weekend. In an interview with CBS News, Biden appeared to suggest that U.S. policy toward China will be less confrontational than under his predecessor, but will not differ significantly in its aims. Sorry about it, guys. I always fight a word that gives me a bit of a headache. So, I quote, "I'm not going to do it the Trump way. We are going to focus on international rules of the road," Biden told CBS in an interview over the weekend. Elsewhere in the interview, Joe Biden said he wouldn't lift sanctions on Iran to bring it back to the negotiating table with regard to its nuclear fuel enrichment. He said Iran would have to stop enriching first. Right, okay, so by the looks of it, Joe Biden's legacy, is China and Iran to its best. Let's see what's happening. Number 2 on the board, guys. Hyundai Kia tumble after saying Apple talks are off. Shares in Korean car makers Hyundai and Kia both fell sharply in Seoul after the former said it's no longer in talks with Apple to develop autonomous electric cars. Hyundai had confirmed early stage talks with the iPhone maker only a month ago. Hyundai stock fell 6.2% in response, while its shares in its affiliate Kia, which had also been tipped as a likely partner, fell 15%. In all, the movements whipped $8.6 billion off the two company valuations. Elsewhere in the auto sector, Daimler Chrysler chief executive Ola something said his company would need until the end of the decade for its electric vehicles to be as profitable as its traditional gas-burning ones. Well, yes. Now, moving on. Number 3 on the board, guys. The stock set for run at fresh highs. Hasbro lows global payments due to report. U.S. stock markets are set for another run at new record highs today against the backdrop of an improving public health picture and the steady progress of President Biden's $1.9 trillion stimulus package. New infections of COVID-19 fell under 100,000 for the first time in nearly 3 months over the weekend, while the strain on hospital capacity although eased further with only 81,000 admissions, its lowest since late November. On the downside, AstraZeneca reported its vaccine had limited efficiency against the new variant of the virus identified in South Africa. Also, by 6:30 a.m. Eastern Time, Dow Jones futures were up 123 points, while the S&P 500 was up by a fraction less, and the Nasdaq futures up a touch more. Earnings season is starting to taper off, but Global Payments, Hasbro, and Lowell's all will report before the open, while Simon Property reports after the close. Number 4 on the board, and probably the most the hottest article today, crypto surges again as Musk cheerleads. Now, the statement that was released half an hour ago, guys, has preceded the statement, the tweet that Elon Musk tweeted yesterday. So cryptocurrencies continued their broad rise higher amid a sustained feverish mood on social media, stoked not least by Elon Musk. Dogecoin, a relatively new unit championed by Elon Musk in a series of tweets, many of them seemingly joking, rose to a high of 8.4 cents overnight, taking its gains over the last 2 weeks of some 150%. Now, you see, even when you're joking and you're that rich and you're Elon Musk, it affects the price of assets. So we would appreciate if people would stop joking so much about the price of the assets. Now, Bitcoin, meanwhile, topped $40,000 briefly, while Ethereum rose as high as $1,735.60 before correcting slightly. As always, momentum rather than any change in fundamentals appeared to be behind the moves. And number 5 on the board, guys, and again, a very important article, oil, guys, Brent Oil and Crude Oil. Brent oil at least $60 as Iran exports fears moderate. Crude oil prices hit $60 a barrel for the first time in a year as part of a multifaceted rally in risk assets across global markets. Prices were supported also by Biden's words on Iran, which took the edge of fears for a quick resumption and the ramp of Iranian oil exports. Biden's comments came against the backdrop of a tightening market as demand slowly recovers while major suppliers continue to withhold millions of barrels a day of production from the market, an effort that is weighing down global crude stocks. By 6:45 a.m. Eastern Time, Brent futures were up almost 1% at over $60 a barrel, while the U.S. crude futures were up 1.2% at $57.52 a barrel. Now, this is what is happening. Top 5 things to know in the markets today, guys. Right, let's have a quick look at some stocks, guys, and then we're going to move on to the charts of the day and the signals of the day. Now, Tesla stock rose 2.3% after the electric car maker announced in Security and Exchange Commission filing it bought 1.5 billion in Bitcoin in January. Earlier, Chinese state-owned publication The Global Times said that China's market regulator and 4 other government departments summoned the electric car maker to a meeting to discuss quality issues. There we go. Something is happening. Now, Apple stock fell 0.4% after the South Korea's Hyundai said Monday it is now in talks with the iPhone maker on autonomous electric cars, just a month after it confirmed early stage talks with the tech giant. Hyundai stock dropped over 6%. AstraZeneca rose 1% as the drug maker said it will work on adapting its COVID-19 vaccine after South Africa halted its planned rollout of the drug. Data showed Astra's vaccine, which is central to the national vaccination plans of many poor countries, gave minimal protection against mild infection from one variant, which was originally found in South Africa. Right, now, what else? We have global payments, guys, which rose 2.7% after the payments technology company announced a partnership with Google to develop a variety of cloud-based solutions for merchants. Its quarterly earnings also beat expectations, adding to the stock gain. Right, what else? Energizer stock rose 5.5% after the battery maker beat quarterly earnings and revenue expectations, as well as increasing in year forecast, benefiting from increased demand and lower costs. And the last but not the least, guys, the GameStop stock rose again 7.3%, continuing to see volatile trading, even as recent social media hype trading hysteria in other stocks appear to be fizzing out. Now, this is what goes on. We're talking about a pump and dump, guys. So let's focus on the 80% loss that happened after the market boycott. Now, let's move on to the charts of the day and the signals of the day, guys. Stay tuned. We're coming back live in 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from Markets.X.
Right, and we're back, beautiful people, with the charts of the day. Let's have a quick look at the charts. We're starting with crude oil WTI futures on a 60-minute chart, trading at 57.57, just short of the $58 mark, with the RSI and the stochastic way up into the overbought levels. There is potential to the upside for crude oil WTI. We might even see crude oil WTI reaching $60 a barrel, just like Brent Oil did sooner. Right, we're looking at the euro US dollar, guys, on a 60-minute chart, which is pointing to the upside at 120.62 this afternoon, with the RSI stochastic again pointing upwards, indicating a bit of buying power on the euro versus the US dollar. Now, if the candlesticks will manage to settle above the 200 moving average, guys, then we might probably look at a correction of the market. And at that point, traders might move their first take profit levels to the 121.52, guys, to the upside, targeting the previous high. In the same time, guys, we're looking at the pound, which is rallying as well, just like the euro. 137.24 for the pound versus the US dollar this afternoon, with the RSI and stochastic once again pointing upwards. Let's see what's going to happen. We're waiting for the pound to break this resistance level, where it's trading right now at 137.40. And if that's the case, then probably traders will eye for a new high, for a higher high. In the same time, USD JPY is tumbling, guys, after the $2 trillion, almost $2 trillion stimulus package was approved, sending the stock markets to record highs. 105.33 for USD JPY this afternoon, with great potential to reach 104.97, which is a retest of that 200 moving average to the downside, with the RSI and stochastic once again pointing downwards, indicating a bit of weakness in the US dollar. The Aussie dollar, just like the euro, guys, seems to be doing very well this afternoon. 0.7692 after the candlestick settled above that 200 moving average. For the US dollar, we might see gold rallying a bit as well, which was trading in 1,800 for quite some time now. USD Canadian again, break to the downside for USD Canadian, 127.48 this afternoon, with great potential to the downside. Both RSI stochastic are pointing that way. If that's the case, probably traders will eye for the 126.83 mark as the first take profit target. And if the downtrend will continue, probably 126.11 will be the second take profit target. We're somewhere in that region. Let's see how the S&P 500 opened today, guys. Again, a fresh high, a new high for the S&P, $3,905.84 for the S&P 500. Quick look at the Dow Jones. Again, a tremendous rally for the Dow Jones shortly after the opening today, trading as high as $31,340.73. Right, now, the US dollar index, guys, is tumbling. It's currently testing that 200 MA to the downside, currently trading at 99.22. Great potential for a short position seen by most traders this afternoon. 90.55, 90.57, somewhere there will be probably the first take profit target that traders will set. On the other hand, what do we know? If the US dollar goes down, gold futures will trade the higher, guys. $1,832 for gold, which broke below the 1,800 on Friday, guys. Potential to the downside as the candlesticks are settling above that 200 moving average. With the RSI and the stochastic close to the overbought levels, but not there just yet. On the other hand, we're looking at Brent Oil, which is currently trading above the $60 mark, $60.14 for Brent Oil futures. Again, with the RSI and the stochastic way close to the very overbought levels. Where do we take it from here? Silver futures follow gold this afternoon, trading at 27.52. Again, with the RSI stochastic pointing upwards. And of course, the precious metals are taking advantage of the weakening in the US dollar. And now, guys, Bitcoin. I saved the best for the last. Bitcoin is currently trading at $43,581. Yes. After it started rallying 1 hour ago following Tesla's statement that the company purchased $1.5 billion worth of Bitcoin in an effort to diversify its capital. In the same time, we're looking at Ethereum futures, guys, trading at 1,699.37 this afternoon, following somehow the rally on Bitcoin. The question remains, guys, when are we going to see another pullback? Because Bitcoin showed us now after every rally, we're going to see a bit of a pullback. And that rally will leave many, many beginner traders exposed to the dangers of trading cryptocurrencies without enough knowledge. Quick look at the signals of the day, guys. Let's see what investing.com thinks about the markets today. We're looking at strong buy indications for the euro and the pound versus the US dollar. We're looking at a weakening of the USD JPY and USD CHF pair. For green for the Aussie dollar this afternoon with strong buy indications. Strong buy indication for the euro versus the pound as well. And USD Canadian is indicating more weakness. The Kiwi dollar versus the US dollar, all green on all 4 time frames. Euro versus JPY, 4 green, 4 strong buy indications from investing.com. Now, the pound versus the Japanese yen and the Swiss franc is a bit undecided. It seems to be wanting to strengthen versus the Japanese yen, and it seems to be wanting to weaken versus the Swiss franc. But overall, the big picture is this. Euro and the pound seem to be going up versus the US dollar, and USD JPY, USD CHF, and USD CAD seem to be tanking, guys. This is it. This is it for this afternoon. Remember, we still have 5 trading days ahead of us. It's not all about today. Join me once again tomorrow, same time, same place, for another great round of market talks. And who knows, maybe by then we're going to see Bitcoin going down to 20 or going up to 50. This was it from my side. Remember to trade responsibly and may all your trades be in the money.